Welcome to Speed Peep Academy. Alright, so in this video I'm going to talk about directional bias. As well, I'm going to talk about market structure. I'm going to talk about liquidity and then point of interest. But I will mainly focus on directional bias because as a trader, if you know the direction of the market, then trading alongside with the market will be easier for you. So directional bias is very important to you as a trader. Please, if you haven't get a deep knowledge about directional bias, if you haven't gained a deep knowledge about directional bias, I am begging you, please, if you want to shorten your journey, know everything about directional bias. Watch the video over and over again to know about directional bias. I think there are about 5 videos about directional bias on this channel. Go and watch them over and over again, because if you have a deep understanding about directional bias, your journey will be shortened. As in, the reason why most of you are even having SL, time without number, is because you are trading at the wrong side of the market. Your point of interest might be correct, your analysis might be correct, but if your directional bias is wrong, everything will eventually become wrong. That is why directional bias is very important. Directional bias is very important. So as a trader, you have to master it, you have to study it and understand it very well as a trader. So this is Go Trade. This Go Trade that I took recently. This Go Trade, and I share this trade with my student on my WhatsApp platform. I share this trade with them. So let me show you guys. I think this. There is a trade. Good. Okay, this is a trade. So I share the trade with them. I'm still going to make a video about this BTC trade. You can see the BTC trade. It was shared as well. Okay, this is a good trade. This is a good trade. This was a setup. Where's the setup? Okay, this was my own trade on Meta 5, and then this is the setup, right? So let's go back to our class. So one basic thing that you need to understand, like I've earlier said, is directional bias. When you know the direction of the market, everything becomes very easy for you to understand. So the first thing, if you open your chart, the first thing that you need to know is the direction of the market. First of all, know the direction of the market, and for you to understand the direction of the market, you go alongside with market structure. So what do? I go to my higher time frame. I go to my this 15-minute time frame. This one is just for entry, right? So I go to my higher time frame. First of all, I will check my 4-hour time frame. When I check my 4-hour time frame, all right, I shrink the chart. So I was not having the kind of view that I want. Though before, I was not having the kind of view that I want, so I have to go to daily time frame. Then this daily time frame. Now on a daily time frame, I discovered that there was a trend line. There was a trend line liquidity, and based on the videos that I've been posting on the channel, when there is a trend line liquidity, no matter what happen, market is going to, if market is selling, market will sell until it clear the trendline liquidity. Now as you see that this is the trendline liquidity, market was creating a higher low, higher high, higher low, higher high until it started reversing. So as it's reversing, I know that it will keep selling until it take out this trendline liquidity. So market was selling, and as it was selling, if you try to use any POI here for your buy, it will take you out. Try to use any POI here inside the liquidity zone to reverse the market, it's going to take you out. So I know that okay, here is where possible reversal occur, but I don't stop there. I has to go to my weekly time frame again to check if the zone is cleared enough. Alright, so when I come to my weekly time frame, I discover that okay, there will be a possible reversal here. So and as when I observe the market very well, I see that okay, there was a trend and liquidity here and it falls under what they call demand zone. Alright, so on my daily time frame, I discover that okay, there might be a possible reversal here because this is where the trend line liquidity begins from. So what do? I go to my lower time frame. You can go to your 3 hours time frame to check if there is a market structure shift. Now depending on the market condition at that point is what will tell you the time frame that you are going to use. I discovered that gold was in aggressive move, so what do? I have to go to a lower time frame, a very low time frame. I go to my 30-minute and my 15-minute time frame to look for my entry. And now what is your entry model? Now the strategy that we trade is market structure, liquidity and point of interest, S.L.P. Now when you come to your lower time frame, the first thing that you need to do is to look for a reversal concept. Remember, we use two concepts in trading this strategy. We use the reversal concept and the continuation concept. And the reversal concept, what we make use of is what we call market structure shift. That's what we make use of. Now when market gets to your lower time frame, your lower time frame POI, that is the POI that you mark on your higher time frame, when market gets to that point on your lower time frame, what you need to look for is market structure shift. That is the only confirmation that you are going to take that trade. Now you don't just jump and enter into the trade without having a market structure shift. You must first of all have a market structure shift at your higher time frame PO point of interest. If there is no market structure shift, you are not going to take that trade, right? So you must first of all have to wait for a market structure shift. When you now see a market structure shift, that is a confirmation that the current trend is coming to an end, and then the market is about to trade in an opposite direction, right? So that is the only confirmation that will make you to enter the trade, that the market is about to trend in an opposite direction. That's what market structure shift is all about. So it was a 15-minute setup. So after I mark my higher time frame, I come to my lower time frame to look for my entry, right? So on my lower time frame, which is 15-minute time frame, market was in a downtrend, creating a series of a lower low, lower low, lower highs, lower low, lower highs, lower low, lower highs, lower low, and then lower highs. Now market was in a downtrend before my point of interest got triggered from the higher time frame. So market was creating a series of lower low, lower highs, lower low, lower highs, lower low, lower highs, lower low, and then this is the last lower highs. Now when market now break above this last lower highs, when it break above it, we say market structure shift has occurred. market structure shift has occurred. Remember, the only thing that qualifies this, the only thing that we see on the chart and we know that the market is in a downtrend is when market is creating a series of higher lows and higher highs. Now the last low, look at, observe what is happening now. Now the current low is always lower than the previous one. Look at this. This low is lower than this low. Then this low is lower than this low. That is how it continues. Now this high is lower than this high. This is lower than this. Now when market create a market structure shift, what it implies is that it's telling you that this they what qualify this trend to be a downtrend has changed entirely, and the market is no longer in a downtrend again. Rather, the market is in different form. And for you to wait to confirm that if really the market is no longer in a downtrend, it has changed to another trend, which is either uptrend or downtrend, is a market structure shift. Now we have gotten our market structure shift. Market have taken this high. Now after market take this high, what the next thing I will look out for is our inducement, is our liquidity, and the type of liquidity that we make use of is what we call inducement liquidity. Now what is inducement liquidity? Inducement is the first valid pullbacks after a market structure shift or a double breakout structure. In this case, in this scenario, this is a market structure shift scenario. So now inducement is the first valid pullbacks after a market structure shift or a double breakout structure. Now there is what we call valid inducement and invalid inducement. Now for your inducement to be valid, the candle that causes the market structure shift must pull back above the candle that the inducement must pull back above the candle that causes the market structure shift and close at the exact point of the candle that causes the market structure shift. For a clear understanding, let me use this and explain. Now if you have your inducement and the candle that causes the market structure, this is the candle that causes the market structure shift. Now for you to have your inducement, the candle will pull back and close either above it, or if you have your, this is the candle that causes the market structure shift, the candle will close at the exact point like this. Now if it closes below, this is the candle that causes the market structure shift. If it closes below it like this, this is not a valid inducement. This is not a valid inducement. You must close at the exact point or above it. Now in this scenario, if you observe very well, now this is the candle that, this bullish candle. Let me zoom in so that you can see very well. Now for the market structure shift, it must have to be a candle body, not a candle wick. This is the bullish candle that causes the market structure shift. Now after it causes the market structure shift, you say inducement is the first valid pullback after a market structure shift. Now this is the market structure shift. Then our inducement liquidity is this candle here. This is a pullback. So we mark this place as our inducement because the candle pull back and close above the candle that causes the market structure shift. You can see it pull backs and then close above. This is where the candle close above the candle that causes the market structure shift. It's either a close above it or a close at this exact point for it to be valid. Right? So that's how it is. Now we have marked our market structure shift, we have marked our inducement. Now the next thing that you need to look out for is your point of interest. Sorry, let me clear. Let me clear this so that the chart will not be. All right. So we have marked our inducement. So the next thing that we need to mark out is our point of interest. Mark out all the possible point of interest. Remember, we have rules in picking a proper point of interest. If you have been following this channel, you will not struggle with that from now, right? But I'm going to explain it. Don't worry if you are new to the channel. Now, we have rules in picking a proper point of interest. Rule number 1 said that there must be a market structure shift. We are getting our market structure shift from here. Then rule number 2 said there must be an inducement, a valid inducement, I must say. Now we have gotten our valid inducement and we have marked it up. Then rule number, I can make it 5. Rule number 3 says mark out all the possible points of interest. So we mark out this point of interest. This is a breaker. We mark this breaker out. And then this is the other block that trigger the market structure shift. So we have 2 points of interest. Rule number 3 says the point of interest need to be unmitigated. Now, when market was creating a market structure shift, it must not touch any point of interest that you want to use to take your trade. It must not touch any point of interest. Any point of interest at all that the market touches, that point of interest should be disqualified to be used as your point of interest. You no longer place your trade there again. It will be disqualified. It is invalid for you to use it to trade it, right? I'm trying as much as I can to explain so that you understand. Right now, we have gotten our market structure shift. We are getting our inducement. Now, rule number 3 say mark out all the possible point of interest. We have mark out this breaker block and then this other block. And we say rule number 4 say the point of interest need to be unmitigated. Now, when market is creating your inducement, it should not touch any point of interest that you want to use. Now, does it touch this breaker? Let's zoom. Now, if it touches the wick of the point of interest that I want to use, that point of interest is still valid. For the point of interest to be invalid, the candle that causes the inducement, it can either be one or multiple candles, remember. But when it closes, you have to check. If it touches the candle of your point of interest, the candlesticks of your point of interest, that point of interest is still valid. But if it touches only the wick is still valid, but if it touches the body, is invalid. The candle that causes the inducement, if it touches the wick of the point of interest that I want to use, that point of interest is still valid, but if it touches the body, it's invalid. Right now, when market creates this inducement, it only touches the wick. It only touches the wick of this breaker. It only touches the wick of this breaker. It does not touch the body. Look at it here. It only touches the wick. It only touches the wick of this breaker. This is the candle that causes this breaker. From here down, this place that I marked, this is the breaker. So when market creates inducement, it only touches the wick here, this wick here. So it does not touch the body. So that means this point of interest is still valid and this one is still valid. Now, the last rule say pick the point of interest that's closer to your inducement. So the one that's closer to my inducement is this one here. So that is why my entry, I took this trade from this zone. And then in taking my profit, I have to look for a trend line liquidity. Now, if you have a trend line, when market is approaching your point of interest with trend line in a trend line manner, is giving you an insight that your POI is there is 90% chances that how your point of interest is going to hold, because when market is approaching your point of interest with a trend line manner, it shows that there is a trend line liquidity that is accumulating at the upside, and the market will eventually go and clear it. Now I mark this place out. This is the trend line. This was the trend line. So I discovered that there was a trend line here. So I just I place my TP target to clear out this trend line liquidity. So that is why I took my trade here, and then here was my TP to clear out this trend line liquidity. I don't know if you understand. Alright. Now a quick recap. Directional bias. Go to your higher time frame, your daily time frame, your weekly time frame, as the case may be. Now I come to my daily time frame. On my daily time frame, I observe that there is a trend line liquidity, and when there is a trend line liquidity, if market is selling, it's going to sell until clear out the trend line liquidity. That is why I mark out this zone. When I mark out this zone, I don't have, it's just an insight that there can be a possible reversal here. Now I will not just place my order here, no, because market might break out market may take out this zone and continue to sell. Now when I mark out this zone, the only thing that will make me to take this trade on a lower time frame is when I get my reversal concept, which is a market structure shift. Alright, so and I go to my lower time frame. I will go to 1 hour time frame, 30-minute time frame, 15-minute time frame, depending on the volatility of the market. Now I discovered that market was very volatile, so I have to go to my 15-minute time frame. Alright, so I go to my 15-minute time frame. So on my 15-minute time frame, when I was at okay, market was at my point of interest at the higher time frame. So what I was looking for is a market structure shift. What I was looking for is a market structure shift. Now before market gets to my point of interest, what happened? Before market gets to my point of interest, it was in a downtrend. And how do you identify a downtrend? The only thing that will make you to know that market is in a downtrend, and the only thing that characterizes a downtrend, is when market is creating a series of a lower low, lower highs, lower low, lower highs, lower low, lower highs, lower low, lower highs. So market was creating this lower low, lower highs until my point of interest on the higher time frame got tapped. When it got tapped, and I see that okay, market break above the last low, the last lower highs. When market breaks above it, we say a market structure shift has occurred. And now what is a market structure shift? A market structure shift is an indication that the current trend is coming to an end and the market is about to trade in an opposite direction. So the market is about to trade in an opposite direction. So when I was at the market structure shift, the next thing for me to look out for is my inducement liquidity. You remember the strategy is all about market structure, liquidity, and point of interest. So we have gotten the market structure part of the strategy, that the market has changed direction, that the market is about to change direction to an uptrend. So now the next thing is liquidity part of the strategy, which is the liquidity part of the strategy that will make use of is what we call inducement liquidity. Now what is an inducement liquidity? Inducement is the first value pullback after a market structure shift or a double break or structure. Now this is the candle that caused the market structure shift. This is a candle that caused, so this is the first value pullback. This bullish candle here gave us our inducement because it pull back to this point and then close. So we mark out our inducement. So this is our inducement. You have to zoom in so that you see it very well. So this is the inducement. Yeah, so this is the inducement. Now after you got your inducement, now the next thing for you to look out for is your point of interest. Where should I place my buy and my stop loss? Now we have 2 points of interest here, a breaker block and an order block. We have this breaker here. Now you will now be confused, which of the point of interest should I use? Instead of you now to use, some people will now take this trade. This is what some people will do. They will take this trade. They will take this trade and then try to cover all this place. They will try to cover all this place. They will cover the order block and the breaker block as well as their point of interest. Now instead of you to have high risk to reward ratio, now you will now have just, if this trade is supposed to be 1:5, it might turn out to be just 1:3 or 1:2. So but this strategy will give you an edge. So what you need to look at for now is to mark out all your possible point of interest. Now we have this breaker block here. We mark it out, and then we have this other block as well. We mark it out. So we have 2 points of interest. Now according to the rules in picking a proper point of interest, we want to see there must be a market structure shift. We have gotten our market structure shift. Here. There must be an inducement. We have gotten our inducement. Then so we should mark out all the possible point of interest. So this is the breaker block and this other block, will mark it out. The point of interest need to be unmitigated. But market create this inducement and close. It does not touch the body of this breaker here, and it does not touch this other block. So the 2 points of interest are still valid. Then the third rule says, the last rule says the point that you should pick the point of interest that's closer to your inducement. So the one that's closer to my inducement is this breaker block here. Alright. So that's why I have to use this breaker block as my entry. So that's where I took this trade from this zone. Took my buy from here. So when I place my buy here, the next thing for me is where to exit my trade, because exit is also very, very important. That's why you see that some people will be on profit and market will reverse and take them out. But if you know where to exit your trade, it will be difficult for market to reverse against you. So exit is also very important. So how do I place my take profit? I use trendline liquidity to take my profit. So I'll drag it all down here, up here. So this trade is 1:5. Now after you have gotten your market structure shift, the next thing you'll be looking out for is a double breaker structure. You look out for a double breaker structure and then you get your inducement. After you got your inducement, then your point of interest, you continue to trade alongside with the trend. So that is how it is. And as you can see, there is a double breaker structure here. I think so. There's a double breaker structure here. Market take out this zone and then take out this zone as well. And then this is my inducement. Market pull back, give me an inducement, and then you follow the rules in picking a proper point of interest. But before you make use of 15-minute time frame, you have to check other time frame, right? And make sure that your analysis is correct. You can see the same thing is happening, the same thing here. Alright, so this will be the end of the video. Kind of exhausted. See you in the next class. Now, one thing that I want you to help me and do is for you to like, comment, share, refer your friend to this channel. That is the only thing that will encourage me. If you observe very well, I have not been posting recently because some of you will just watch, you will not like, you will not comment, you will not share. You just watch, and I'm trying all my possible best to make sure that if you stick to this channel, you will not have any issue, you will not have any struggle. Because this strategy, it has been tested and is proven. If you stick to this strategy, master your trading psychology, you are good to go. So the only thing you help me do is for you to share, like, comment. There is a video that I have intention of doing, and that video is going to be a very long video. I'm going to take my time and explain market structure in detail, explain liquidity in detail, explain point of interest in detail, explain directional bias in detail, and how to take profit. But it all depends on you guys. If you show me that engagement that I want, if I get enough engagement, enough like to my satisfaction, I'm going to create that video. If not, I'm not going to stress myself and do that. And also, if you want my mentorship, I do offer personal mentorship, and as well I offer general mentorship. So if you want my mentorship, for now it's very cheap. Very soon I'm going to increase the price. For now it's very cheap. And also, if you want to join my WhatsApp community, you can message me on the description. My contact is on the description of this video and on the comment section. So you can message me for mentorship, you can message me for signals, you can mentor me, you can message me for any question that you have. All right, so take care of yourself.